So this video, we're going to do some dividend mining. I went to this website that I'm what the hell's the name of the website? You probably don't use it. It's called businessquant.com. So that's where I pull a lot of data from. They have screeners, but when I do the industry chart on my videos, I get it from that website if you want to use it. But anyway, so I did a screener and looking for any stocks above 20% yield. And this is what came up. So as you know, when a yield is really high, that's a big red flag. That doesn't mean the company's giving away money. It could mean a lot of things. It could mean the screener is incorrect. So I want to first confirm they are actually paying that yield. But if they are paying that yield, chances are the stock came down dramatically and the yield will probably be cut or suspended. So they're probably not going to be paying those big yields. But let's just look at the companies. Maybe if they can cover their dividend, then maybe they will keep paying that 20-30% yield. So let's just go through it just to confirm the actual yield. So IEP. So I'm just going to go Yahoo Finance, and then we can confirm it once again when we look a little deeper. But Yahoo Finance, I mean, some people bash Yahoo Finance, but I think it's 98% of the time it's correct, it's accurate. So I rarely have issues with Yahoo Finance. IVR Invesco. So I'm just going to Yahoo Finance, searching the ticker, and then on the first page it shows the yield. So I'm just going to put that into my spreadsheet. I just want to filter out anything that's, because it's possible they were paying a high yield and they just suspended the dividend payment. So I just want to get rid of those. So everything looks legit so far. Constantine, what's up? Thanks for joining. Ed. And I was doing the raffles each video, but it didn't seem like people were that into the raffle. I thought it would kind of encourage. There was a short report on IEP by Hindenburg. Okay, thank you. That's helpful. Off the bat, JB Weld with the donation. Thank you. Isn't a long history of large dividend increases more important? Exactly. So that's what we're going to do. When we're going to do our due diligence, I just want to get this Excel sheet together so we know the population of stocks that have the high yield. But looking at historical dividends, and if they're raising it year over year, like some companies have been doing it for 50 years, that's probably the best indicator. But if somebody's paying out of the blue a 30% dividend yield, maybe we should just check it out, because maybe we can get some make a little money on that. What did I say? ABBT, I think, was the longest history of large dividend increases. I would love to chart out total return versus, say, Altria. Yeah. Now I hear you. Yeah, if you're looking for a stable dividend, tobacco companies are great, REITs are great, MLPs. The reason tobacco companies are so good paying dividends is that the stock price is usually lower than it should be, because a lot of funds, I should say, don't buy. See, I don't see a dividend on this one, so I'm going to just take it off the list. But when you see a really high dividend, it's generally not a good thing. Here's another one. It's rare. It's usually because, like, just to give you an example, See, because dividend is always annualized. So to give you an example, say I'm just going to make up numbers. Say this company in the third quarter of 2023 paid $5 dividend. And then and say the stock price is $200. So don't make the mistake of saying the dividend's 3%. It's always annualized. So if that was they paid each quarter, you'd take the last dividend, multiply it by 4, and that's the yield. So that's a great yield, 10%. So generally the reason, so it's always annualize the yield. You could take the prior 4 dividend payments and sum those up and divide by the stock price, or you could take the most recent stock price times 4. Obviously, if it's semi-annual dividend, you'll multiply by 2. If it's an annual dividend, you keep as is. So if this company was paying a $20 annual dividend, that's a yield of 10%, which is a great yield. Now, if there was this company had a huge lawsuit, or maybe the market just crashed. There was a big market crash. Everybody went down. And let's just say the stock went from $200 and then over the next 6 weeks went down to like $70, a big drop. Now the yield is 29%. So they didn't change anything. They're still paying that $5 quarterly dividend. So nothing changed except the stock price went down. So as the stock price goes down, the yield goes up. So generally when you see a really high yield, it's because the stock price came down really quickly, like between the quarter. So it's very likely the following quarter, like in 4Q, if the stock price did go down this much, it's very likely they would cut their dividend to say $2 a quarter, and that would bring the yield back down. So that's generally what happens, but that's what we're going to do. We're going to research. Because it's good to know. You don't want to just, you never want to rely on others, including me. You want to learn it for yourself, which is hard to do, because if you don't know how to research this stuff, then you maybe watch someone like me, and then you could pick up a thing here and there. Eventually, you can do it yourself. Zim, they cut their dividend or suspended it. MPW, we know. Neil, what's up? Who else joined? Devin, Projwal. I hope I'm saying that right. Projwal, hey, how's it going? Medical Properties Trust, we know why their dividend went up, right? Their biggest tenant is having trouble paying. I think they might own 20% of the properties, at least 20% of their properties from MPW. And their largest tenant is struggling to pay their rent. So the stock price crashed. So it's just simply a timing thing. Like I said, nothing changes. If in this situation, a company was trading at $70, say consistently, and then for some reason the company has a ton of cash and they raise that dividend to $5, and now they're paying a 29% yield, that's a real yield, because they increased the dividend knowing how low the stock price is. But companies usually wouldn't do this. Like if you had a company, this might make sense. Okay. Yeah, I'm a stickler with pronouncing words correctly. I don't know if you guys noticed that. So I do like try to do a lot of research on how to pronounce, especially foreign words like foreign currencies or foreign names. But anyways, so if you had a business, right? Say you had a laundromat, right? And it was you and a partner, or say you had say you had a laundromat and revenue and then profit. And say you had a revenue, and let's just say your margins are usually like 20%. Okay. I always do these kind of, I hope maybe that's why people don't watch my channel, because I always get off on these tangents trying to explain these situations. Let's just say you owned a laundromat. In your town, and you needed like 350,000 to get it started. So you find 4 partners, you can maybe your neighbors or friends, and you said, can you give me money to help to start this business? You need 300,000, so you only have half that. So you offer kind of like stock in your company. It's not actual stock, but it's a partial ownership. So you said, I need 150,000 because I only have 150,000. So if you are interested, you ask all your friends. If you're interested in being an investor, yeah. So you're saying you're going to own half the company. You put 150K in of your own money to start it. The other half you're offering for people to become partners. They will own 12.5% of the company each if they put in $37,500. So 37,500 times 4 is 150. You just need to find 4 people to put in 37,500, and you do find those 4 people. So now you have half the company, and then these partners own half the company. These 4 people collectively own half. So everything you're going to split. Whatever profits we have, it's going to be a percentage. So at the end of the first year, you have to split all your profits with your partners. So they get $2,500 each, and you get $10,000. That's how you split the $20,000. And then the following year, hopefully, maybe this is 2022. Now things are better, and you triple your revenue because you finally have like consistent customers. Now each partner gets 7,500. You get 30,000. So this is like the dividend payment. Anytime one of these members gets payment, it's like they're receiving a dividend. So they all put in the dividend yield for 2020. For 2022 is 7% because they put in we'll just talk about partner one. He puts in 37,500. You give him a dividend of 2,500, so his yield for that year is 7%. 2023, he gets 7,500, so 7,500 over 37,500 is 20%. So that's the yield. But then you negotiate with them because you're doing all the work. You're running the whole thing, and you're splitting all your profits with them. So, and you want to kind of reinvest into the company. So they give you the option of instead of everything shared, they say, well, okay, as long as we get $7,500, because that's a 20% yield. As long as we get 7,500, you can do whatever you want with the money. Either reinvest it in the business, but you can't just keep it yourself. If you do want to take a payment, a dividend, you have to share it with us. But if you want to reinvest, whether open more stores, that's fine as long as we get our 7,500. So if the following year it goes up to 400,000, now you finally have the ability to reinvest some of the funds. I think I'm getting too far off on a tangent here. So if you did split, if you did come on, F. Okay. So if you did split it like you did in the past in 2024, assuming you got 80,000 profit, then each person would get 10,000 this year. You would get 40,000, and their yield would be 27%. Or you could keep it at 7,500. If you did that, there's an extra $20,000 for you to reinvest back into the company. So you, as the owner, you can just withhold the dividend, and then buy another store, or maybe if you might not have enough money to buy another store, maybe buy another, like expand, like improve your space, or buy some other machines or equipment. So that's why when a company has money, it's really their option where they want to pay the dividend, assuming they have enough to pay it, if they have cash flow. So that's why when the dividend's really high or really low, the company will usually adjust the dividend to be more in line with the stock price. I don't think that example was that good. This is what always happens. I try to give an example. But anyways, let's just go back to it. Okay, CRCT. Okay, that's what I was thinking. Like, so if, okay, in this example, if you wanted to grow the business so you can make, because you in 2022 you only got $10,000 and you had to give the other 10,000 away. In 2023 you got 30,000, and it's hard to live on that. So instead of paying yourself, because when you pay yourself you have to also pay your partners the same amount, you could withhold the dividend payment in order to like grow the business. So that's exactly what companies do. If they need the cash, they'll withhold the dividend payment. What's up, Scott? Yeah, I do like ET a lot. I think it's a good it's my favorite midstream stock. I'm invested in ET. It still seems undervalued. DSX. OPI. Yeah, I mean, some companies, because in this case, it probably makes sense to reinvest all the money to grow the business so you don't have to share your dividend payment. Because the goal was, hopefully, if you get really good employees or spending capex, hopefully by 2025 you can like start growing a lot. Instead of, maybe you can get a million in, maybe if you expand your store, maybe next door is open, and then you could get a bigger space, knock down a wall, and now your profits are 200,000. So now you split the 200,000, you make 100,000. Wegro, what's up? But usually there's a fine line. You don't want to overpay in dividends, even though the investors like it, because you need the cash to grow or to pay bills. But you want to make your investors happy. And happy investors means they'll buy more of your stock and then push the price higher and make your company more valuable. CLRO. I guess a lot of these companies cut the dividend. MTBL. Remember, Zim was like 100% dividend at one point. This company probably has a Motable. That's the name of the company, Motable. So we knocked it down to 11 companies. Let me just. I pay a dividend. So let's look at the stock price for these companies. Do you think Zim will take a hit due to the Middle East? Yeah, it seems like they're gonna. I mean, didn't they say, like, they did mention that the conflicts in the Middle East aren't going to affect them that much? I can't remember exactly what they said, but I think it's kind of risky. So this is like an indication of when a stock crashes like this. That's usually why the yield is so high. So they were paying $2. Let's see, simply Wall Street. Yeah, Zim's kind of seems like a scammy type company. I don't think it is, but it seems a bit odd. See, this is IEP, and there's a report, a short report. Constantine mentioned maybe Board of Security. What's up? ML Williams. Zim is fine. That sector is extremely. It's probably the most cyclical sector in the world. So this gives me a little more comfort in IEP because you could see the yield was always there. They've always paid a dividend. It got to double digits. Even in 2021, they've been paying double digits consistently. So this seems like a stock we can maybe invest in, IEP. Right now, we're just narrowing down the stocks to see what we should actually spend some time looking at. So that Invesco, Invesco is a weird one. Icon was under investigation for his dividends. They said he was using his dividend like a Ponzi scheme, paying the dividend with the investor money. Yeah, I could see him doing that. So Invesco, that also came down a lot in stock price. Consistently paying 40 cents. He's a crook, right? Icon. You always hear IVR. Look at that yield. It was up to 60%. It's I would just probably not do Invesco. I think it's a little too questionable, the future of the dividend. Also, the coverage. You want to make sure they can cover their dividend payment. When Zim was paying 100% dividend, they could cover it. Their cash flow was so high. It's like usually a really big dividend, like Costco paid a special dividend. I think it was, what was it, $5 a share or $20 a share? A special dividend is great because you own the stock. It's a one-time thing, but a consistent dividend of like 30-40% usually doesn't happen. Let's see. The stock was 35. It went down to the 20s. So this isn't too volatile. TRMD. Oil and gas midstream. That's a pretty safe, fairly safe industry. Because the marine shipping companies and the REITs, they're so volatile, the industry. Like if it was a supermarket paying a high dividend, I'd say that's a safe dividend. But these kind of companies, if the price of if mortgage rates change, or the price of homes, or a commodity business, they're very, very volatile. So that's probably why they're paying a high dividend. But if they're giving it to you, maybe we should just take it and not question the dividend yield, right? So TRMD looks interesting. TRMD. I'm using Simply Wall Street. TRMD. So they've been paying a dividend since 2020. It looks like a new stock. So now it just recently got pushed so high. Why is it so high? Okay, so they suspended their dividend in 2020. They brought it back to 58 cents in August 2022. 3 months later, $1.46. So they almost tripled it. November 2022. And then 4 months later, they doubled it again to $2.59. Would love to find a REIT that is investor focused. Some seem to just make management rich. I think a lot of companies, that's a thing, are interested in making the executives rich. Because if a company, because if a CEO takes like a big bonus, like $100 million bonus, if he doesn't care, because he's like, I'm not going to be here next year or in 2 years. So if the company struggles in a few years, I don't care. I just want to get my bonus now. It's kind of like the president trying to like really make the economy amazing and strong, making the stock market real strong by doing things like cutting interest rates to near zero. And then they don't care, because they go, okay, in 4 years, as long as the market stays up, the next president could worry about it. That's why companies that like Warren Buffett, CEOs that don't really take a salary, like you could trust those people. If you like invest in a company where the CEO is always struggling financially, they're always underwater. You don't really know this though, but those kind of companies you want to avoid. This is just so weird. It's very inconsistent. Like if you were looking for a dividend, there's no safe double-digit dividend. You're not going to find a safe. If you want a safe dividend, you invest in like an Exxon, or you invest in like one of those companies that's been paying a dividend for 50 years. But if you're just looking for a quick buck, maybe we can time it right, I would probably avoid this. This doesn't make me too comfortable. Because it's kind of like if the stock is going up in price, it's fine to keep buying, even if it's extremely overvalued. You just don't want to hold it when it goes down. You got to get out before it goes down. And a lot of people don't usually get out of the stock. They keep holding. I'm guilty of that too. I'm up 110% in my new holdings. I don't think I'm going to sell. It's kind of like when the stock goes up, we don't sell. If anything, we buy more, because we're making all this money and we love the company. But when a stock goes down, we usually sell it. We would never buy more. But that's the time. When a stock goes down, it becomes more attractive. When a stock goes up, it becomes less attractive. But we do the opposite. Because when it goes up, we keep thinking it will go up forever. When it goes down, and we're all victims of this. That's why you should just put it into the S&P 500 and call it a day. Like I did that with Meta too. When Meta was, I was up 150% on my Meta in 2021, so I bought more because Meta was down 20% from its peak. It was up to like 380. This is in 2020, the end of 2020. It was up to like 380. Then it went down to like, no, it was up to like 410 and then went down to like 350. So I'm like, oh, it's down. So I bought more because I made so much already on Meta. Fortunately, that did come back. But a lot of times it doesn't come back. Okay. So yeah, we all know MPW. One of their tenants is struggling to pay, and that's why it's crashing. It's down to 340. It was just in what is this? So in 1 year, it's down like 70%. In 2 years, it's probably down like 85%. This could be a good one. I mean, I'm not sure if I would. I could see why some people might be scared of this one, but this could be a potential. So you see, they did have a steady yield, and they were paying a dividend, a growing dividend too, for like 8 years. They did cut it in September 2023 from 29 cents to 15 cents. So they cut it in half. But you can see the yield where 17.5% in January 2024. So maybe this should have been an indication. They cut their dividend in half. Maybe we should have sold. Maybe we should have waited for a crash. And the forecast is for the yield to stay really high, but I wouldn't really trust this chart. This is the kind of stock I'd be much more comfortable investing in MPW than what we just looked at, because they consistently pay a dividend. Let's look at UAN. Buying the dip should only be with near long-term companies. If not, it's a falling knife. That's the thing. Buy low, sell high. I think if you really want to make money, buy and pretty much never sell, or at least buy good companies. A lot of people buy these meme stocks because they don't really understand the market, and 10,000 people on Reddit are talking about buying the stock, so they go, okay, if they're all buying it, which sounds like it makes sense, but it usually doesn't work out that way. So this is a kind of a scary stock to invest in. They have been really increasing their dividend. Sheesh. They were paying 70 cents in 2019. Then they didn't pay anything. They brought it back to 172. They must have done really well. They must have had a lot of cash coming in. But then they cut it back down to 155. It's still a 30% yield. The stock must have really crashed. Jeez. Chicago riveting machine. Yeah, MPW, like it's a legit solid company. They provide something that's tangible, office space. This is why this company, CVR, it fell off a cliff. It was 30 just a year ago, and now it's half that. I've heard of this, but I've never really looked at Chicago riveting machine. How about reinsurance companies? Lots of cash flow, little headcount than most. Yeah, reinsurance are good. Can be good investments. Insurance is generally a pretty good investment because at least most insurance companies, the ones that run a good business, they generally make a lot of money, a lot of cash coming in, as long as they don't take too much risk. It manufactures custom cold-headed parts, riveting machines, and automated. It's because of the highest quality products compared to price. Manufacture brake lining and harness rivets in 1920. Okay, so it's for cars. See, this makes me more comfortable when I see a physical product. Like I prefer to invest in companies that like sell a tangible product, like a car or a bike or a phone, something like people use. I get a little concerned with these like weird companies that I'm not exactly sure what they do. So CVR looks interesting. The stock is up 10%, revenue of 750 million. And that pays the highest dividend too. Okay. Has anybody invested in CVR? Physical products always require CapEx. If you make the physical products, but you don't have to make them. Supermarkets or electronics stores, they don't make products, they buy them and resell them. Supermarkets, I think, are great because they sell something you need to live. You can't live without eating, and when things are tough financially, people are going to go to the supermarket than out to eat, and there's always people struggling financially. Always a lot of people, so they always have demand. It's just the margins aren't so great. But it's a really 15 million market cap. Maybe it says 2 point. Wait, am I looking at the right one? Oh, that's why I'm looking at the wrong UAN. I look at the wrong one. UAN. CVR Partners. Agricultural inputs. Let's all just plow our money into CVR Partners. A company that existed for 60 years using robots to make robots. I like to read about them on Wikipedia. Too bad they don't have a Wikipedia page. Okay. Oh, this is an MLP. MLPs generally pay higher dividends. It's not too small. I mean, it's under 1 billion, but 720 million. It's at least it wasn't the other company we just looked at. How do you feel about foreign investments for dividends? I started buying. I think with foreign investments, and thank you for the donation. Really, really generous to you. I generally look at the country. The best country to invest in is the U.S. because our stocks just keep going up. Very safe political climate. But a lot of countries are safe. They just, for some reason, U.S. stocks just go up so much. We consume a lot, and a lot of people use U.S. dollars as a safe bet. But if you wanted to go to other countries, I'm invested in Nubank, which is Brazilian. So obviously, I don't listen to my own advice. But there's a lot of countries that are fine to invest in. There's very little political risk. Like the UK, Germany. Those are solid. Japan's pretty good. They're going through a lot of deflation, but they have a pretty solid economy. So if you find companies in those countries, I think it's fine. If you want to diversify a little bit. But what's it called? Index funds are there's a lot of index funds on different countries. So so this might scare people because a K1, that means it's a little more difficult filing your taxes. But it's not like, I don't have a problem with it. I don't know what some people, I found some good prospects. Luxembourg, a lot of countries in Europe have pretty sound economies, are pretty safe, I would say. UK, yeah, I'm not sure about the taxes, so I guess I don't invest in many foreign stocks. So I think I've heard of that. Taxes, you'll get taxed higher, but it's what you take. If they're offering a 12% yield and you get 7% after taxes, it's still probably better yield than you would get. Where will the SEC filings be? Investor relations. I thought the UK had high foreign dividend taxes. I'm not sure. You're saying as an American, if you bought a UK stock, Nutrien's a good company. I was about to do Nutrien. That's a good Canadian company. Okay. Dividend taxes. I don't even know how to search it. Investing in UK. Because a lot of these, if I'm saying investing in UK, they probably think I live in the UK. But I want to know, do you pay tax on dividends in UK? You do not pay tax on any dividend income that falls within your personal allowance. I think this is assuming I live in the UK, but I want to find out by living in the US. Do the US pay taxes on UK dividends? And I wouldn't totally trust what I read online either, but this is all we got. Obviously, you want to do more research. How are dividends in the UK generally taxed by the IRS? Because the UK has a tax treaty with the US, UK dividends are subject to preferential taxes instead of the regular tax rate of 40%. So they're treated as qualified, so it's a lower tax rate. are 0 to 20%. So that's a good sign, good news. You into microcap. I'd say like I would invest 1 or 2% of my money in microcap. I'm trying to find the right microcap stocks. I only invested like a few hundred in them recently. But I wouldn't put that much money into it. But if I could, no tax for UK. I own UK stocks. So JD, do you live in the US and you own UK stocks? What do you mean no tax for UK? So are you saying you live in the US, you invest in UK stocks, and you don't get taxed at all on dividends? But like, it may sound confusing. Like if you have a job, if you are a consultant, right, and you get like you're paid on a 1099 basis, like you're not a W-2 employee, so you would tell the person you're working at, like, say they gave you $50 an hour, so you tell them how many hours you work this week. So I work 13 this week, so he gives you a check for $650 for the week, and every week you go through this process with the employer. He doesn't take any taxes out. So you go, oh, okay, I work 19, so now he gives you a check for $950, and you might think, oh, I don't pay any taxes, so this is great. But when he'll give you a 1099 at the end of the year. I'm doing this for all the companies I'm doing bookkeeping at, and it'll show you on the 1099 how much you made at the company for the year. So say for the entire year, 2023, you made like $22,500. You have to give this to your accountant, and then your accountant would add this to your all the income you made, and then calculate how much taxes you should have paid. And then you might have to actually owe money to the government of taxes, or maybe you overpay taxes on your other jobs. I don't know. You might not, or maybe you have losses. So most people usually pay taxes. Sometimes they say, "Oh, I don't pay any taxes." They don't realize they are paying taxes, because once their accountant files, they lump everything together and give you one bill and say you have to pay the state, $8,500, and then you have to pay the federal government, taxes of like $11,200 or whatever it is, or you might get a refund. Isn't Unilever a UK-based company? Yeah, I think so. But if you invest in ADRs, like you can invest in lots of foreign companies, but like if you invest in Alibaba, it's a Chinese company, but you have nothing. If an ADR or ADS, whatever you call it, they're both the same thing. But the benefit of investing in these is that you don't have to worry about anything with the other country. Everything you do is going to be taxed at the US level. So that's why if you really want to invest in a foreign stock, just only buy ADRs. So you don't have to deal with, that's the benefit. Everything's converted to US. Any foreign currency translation, all the dividends, everything's converted. So you would get, like if you invested in, XYZ stock, which was a Chinese company, and if they always paid, 100 Chinese yuans per share, then you would just get, $14 US per share. And then there might be you might get a little less because there may be some like fees they charge for this. So yeah. You still have to pay foreign dividend tax for some ADRs. You have to pay foreign dividend tax for some ADRs. I mean, if that's the case, then it would be after you receive your dividends. Those taxes, everything's, whenever you get your dividend for these foreign stocks, everything should be taken care of in terms of, if there was like say this XYZ stock paid 100 Chinese yuans per share in dividends, which is equivalent to 14 US dollars if you did the conversion. Now, if they had to take a 10% tax, then you actually receive $12.86. They would take 10% out, but your accountant shouldn't have to do anything in terms of foreign currency taxes. Everything's handled on the U.S. level. The regular, you can check the tax on dividends on PwC for various nationality and nation. Yeah, I think like maybe people said that with Zim, like they were expecting $5 US and they ended up getting $3 US per share. Because I think this is what somebody told me. They said the Israeli tax is really high, so they end up getting a lot less than they thought they would get. I'm not 100% sure about that. I should do a video and look into this more because I'm not too sure how they like what how much they remove from your dividends for the taxes. But I do know once you do get your dividends, it will always be in US dollars. And then you just have to, maybe I'll do a video on this so I can look into it more. Yeah, Zim is in Israel. That's what I said, right? Did I not? What companies do you plan to review now? Well, I'm doing Intel. I'm doing 3: Intel, Micron, and United Microelectronics. I'm actually working on those 3. First view here. So nice to hear someone talking about the people instead of at folks. Thank you, Snook Arrow, for joining and commenting. For my BTI shares, I pay no foreign dividend tax. So Panasonic, please. Let's go with European one. So here you go. So he has BTI shares and he pays no foreign dividend tax. Tuan Pham. Those are good suggestions. But just to invest in ADRs, I don't think anybody here probably invests in foreign stocks. You can't invest in a foreign stock in the actual stock of you can't buy Alibaba, the Chinese shares, unless you open up a brokerage account that buys Chinese stocks. I'm not talking about the ADR, the BABA we invest in. It's not easy to buy foreign stocks. You can't do it through your broker. You have to, there's a specialized broker or you have to somehow access a broker that buys. So probably everybody that buys foreign stocks is buying ADRs. Are you live every Sunday? No, I'd say maybe like once or twice a month. I just whenever I have free time, sometimes I won't do a live for a few months. Sometimes I'll do it a few straight weeks. I guess the mood I'm in. Um, just on the OTC stocks, and you're Canadian. Oh, they listed just on the OTC. They listed BABA recently. Unless it's U.S. stocks and you're Canadian. Yeah, then maybe so. Maybe. Yeah, it's probably easier to buy Canadians. I mean, it's probably easiest to buy U.S. stocks if you're not in the U.S. If you want to buy any foreign stock, if you live in the U.S., it's not that easy. You can do it. It's not recommended. Yeah, we talked about Zim. Well, they suspended their dividend. But this company seems really interesting, CVR Partners. We should all just load into CVR Partners. This looks really compelling. 39%. Hottest property in the world now. Rich Chinese flocking here. UAN. I've actually been trying to get other YouTubers to do a live stream with me. So if you follow other finance channels, just tell them to contact me to do a live stream on my channel. I don't care if they have 100 subs or 1 million subs, whatever, but it's always better if I have somebody to kind of like bounce off of, because I don't think I'm that good at doing these things. Okay, dividend of 36%, not well covered by cash flows, high level of debt. Canada is 15% for non-Canadians, I think. Simply Wall Street has them valued at 150. Let's see what the analysts say. I have a feeling there won't be any analyst targets. Yeah, no analyst targets on this. So that's the thing. There might not be that much liquidity, but if they're going to pay this dividend for another 2 quarters, we should just take it. It might not be a long-term thing. That's what I'm saying. Like you don't want to like hold these things forever and then lose all your investment. Because even if you get a 30% return in 1 year, if the stock goes down 50%, you're losing money. The revenue looks really good. It's grown a lot. And free cash flow looks really good. Look at that. It used to be negative. Now it's positive. This is what happened with Zim. They had so much free cash flow. So much money came in that they didn't know what to do with it. So they gave it back to their investors. That's why they're paying a 50% dividend yield for like 2 years. Like it was like 20%, then 80%, then like 40%. So if a company's flush with cash, they might just have to give it back to the owners. Remember the laundromat example? Remember I said if he doesn't have to pay a dividend above $7,500 a year to his investors. So if there's extra cash, he can use it to grow the company. But if he does that, right, and this is your salary, I guess. Your salary went from 10,000 in year one to 30,000 to 40,000. No, we're keeping it at the 7,500. And then he was able to reinvest back into the company. So at some point, if your cash flow gets so high, I hope you guys remember this example. If you withhold a lot of the cash, which is what a lot of companies do, like Apple, they don't pay much of a dividend. Nvidia doesn't pay much of a dividend. They withhold the cash and keep it to grow the business. But at some point, you can't grow it anymore. If you're an Apple, you can always grow your business because it's very scalable. But certain businesses, you can't just like like a railroad company. At some point, it's hard to grow that business because you can't just build railroads in every single town if you want. Like you have to, and it takes a lot of time and a lot of money. So sometimes just giving a dividend just is the best thing to do. It might pay your investors may get part of it, but you will too, as if you own, say, 10% of the company as CEO. So this looks real good. I like the positive free cash flow now. It did come down, but it's still positive 230 million. CVR. Thank you. The dividend origin retention for me to invest in Canada is 25%. The dividend origin retention. What does that mean? You mean your taxes? That's how I see tobacco companies. How much can you do? Right. There's only so much. I mean, you could make more cigarettes, but you need people to smoke those cigarettes. There's only you could market more. You could do a little more marketing, but it's restrictive tobacco because you want to make money, and you do make a ton of money, ton of cash. But you get in trouble when you do add more people, add more customers, because then it's frowned upon. So you want to keep growing, but I guess not grow too fast, because you don't want everybody to start smoking, because then all hell breaks loose. But you do want more people to start smoking, and you want the people who do smoke to smoke more, which is pretty much what happens. But that's an interesting analogy, the tobacco. That's exactly. So like there's not much you can do with the cash, but you give it back to the investors, and you give them like what's BTI, an 11% yield. I guess CVR. I guess they're okay. So 131 million of revenue. That's down. That's not good. From 100 and let's see what this. I think 9.5. Yeah, 9.5, which is a huge yield, and it's a safe yield. It's not like a yield like are they gonna be able to afford it? They can afford it. It's just it's when you sell something people are addicted to, it's kind of like the best business model. It's like a drug dealer. Obviously most drugs are illegal, but people who sell drugs are selling the best. It's the best business model, because people they'll do anything for the drug. They can't live without it. They'll steal to get money to get the drug. So tobacco is similar, and people probably won't steal and murder for tobacco, but it's addictive. So you have kind of that customer base that's not going away. So 23 million from ammonia. UAN. Okay, UAN, urea ammonium nitrate. Okay, that's what okay. So there is some risk because it is tied to the demand for ammonia. Urea products, 7.7 million. Their freight revenue is going up, 10 million. So does anybody know about ammonia demand? Okay, what's the most common thing? What ammonia? What is 80% ammonia is used in agriculture as fertilizer. So so fertilizer is the main component for ammonia. So fertilizer is obviously not going away. There's plenty of farmers, plenty of people who need it. We need to live on some of the stuff that's grown, the crops. But I could imagine the price of what's the main ingredient in ammonia? Ingredient in ammonia. Is produced by combining atmospheric nitrogen, which constitutes 70%. Okay. Ammonia. Okay, the market size in 2022 was 170 million tons. By 2035, it should be 300 million tons. A CAGR 7.3%. Urea, it's I think you're thinking of the urethra. Urethra. I think, isn't that what you're thinking of? Urea. It's a molecule. It's a compound. I don't know how to. Oh, you're right. Urine. It's found in urine. You learn something new every day. I thought you meant the urethra. That's why our urine smells like ammonia. Both urea and urine are different. In humans, urea is nitrogen-containing waste substance that the kidneys clear from the blood. Human urine consists of water, urea. Yeah, I knew it was waste. Many of the tobacco companies have been dipping their toes in cannabis. Cannabis is becoming legal. Yeah, if cannabis is approved on a federal level in the U.S., then if you own a tobacco stock, you're going to be rich. Yeah, make sure you piss in your yard if you want your crops to grow nice. Yeah, I think urine is it's mostly waste. But I guess the urea they use to make ammonia is urethra is a tube. That's what I was thinking of. Um, I guess I never heard the word urea, or at least, yeah, I don't remember. So CVR Partners, this looks like a great candidate. Okay, ammonia. What stocks? Best ammonia stocks. How did this dividend convo turn to P? Well, because we were looking at CVR Partners, which pays the biggest dividend, and it looks like the best dividend because it looks like they actually are a profitable company, and they make ammonia, and urea is pneumonia. It's part of pneumonia. Ammonia. So they sell urea products and ammonia, which is that's best ammonia stocks. We can just all pee in a cup and sell it. The ammonia frontier. This is where you could have said, speaking of pee, I do have to pee. That's a good segue. Let's see if they have any more. I always like to see. That's all they have for revenue. So UAN is their biggest revenue generator. It seems like when I do a lot of research, I don't know, maybe it's just in my head. A lot of times the stock doesn't, I lose money. The more research I do sometimes, maybe because I overthink, and then but I would like to just identify one of these stocks before they blow up, before they turn into Nvidia. I mean, you could have bought Nvidia, you could have bought Apple too at 100 billion and still 30x your money on Apple. 100 billion is not a small company. Due diligence, clearly bad luck, more knowledgeable. I think does anybody use finviz? I don't know. It's okay. I guess I got to get used to it. Get a pee bottle. I would never do that in my house. I guess if I was driving, I don't know if I would do it if I was driving either. Okay, so this must have reversed stock split. That would be crazy. How could it get? It must have done a reverse stock split. UAN. What's the best free financial analysis platform? I guess Yahoo Finance. I like Yahoo Finance. I mean, yeah, they must have done a reverse, a 1-for-10 reverse stock split. Because no stock IPOs at $200. So that's how I knew they did a reverse stock split. Who do you use in place of finviz? Well, I guess in my videos, I use Simply Wall Street and finviz when I make a video. But honestly, I don't really get that much value. I think I mainly do it for the visuals. I just prefer to read the SEC filings. That's what I mostly do. But it's interesting to learn to see this stuff. So they did a 1-for-10, which I might have been able to guess because nobody starts out at $200. So if you wanted to know how much they IPO for, you could just divide this by 10. So it was around $20 they IPO'd, and then it went up 50% from April 2011 to January 2012. So after 7 months, it hit its peak. It never hit that level again. And then they had to do a reverse around here because it was in November 2020. November 2020, because it was around, $8. So it was under $10. I mean, under $1. So you might get delisted if you're under $1. And not just delisting is bad, because when you move to the OTC or pink sheets, a lot less visibility, a lot less people buying a stock. But also another reason to do a reverse stock split is because like these big funds like BlackRock, who have trillions of dollars under management, when they move the market, these kind of companies, because they buy big blocks of shares. Like they buy like $1 billion at once of stocks, or $100 million at once. And they usually don't buy stocks under $5 a share. So if the actual price of the stock is under $5, it won't even show up on their list to buy. So that's another reason you don't want to have a stock that's too low, like $2, $3, $4. You want to have it like at least probably at least 10, but definitely above 5, or you just don't show up on their radar. And you can have a stock, you can have a company that's doing well financially, and the stock doesn't move that much because no one even knows about it. Eventually it'll catch on, but there's stocks like a Tesla who people just keep buying and buying and buying, just because of all the publicity. So they did a reverse stock split, and it did really well. I mean, even after reversed, it was like, say, $5 and a 30x. Damn, we missed that. That would have been see, how do you know this stuff? It's so hard to identify. Okay, so look at all this trading volume. What really a lot of in that month alone, 1.5 million shares traded. It's really coming down. That's why the yield is going up. Well, yeah, reverse stock split. It's so you don't get delisted. That's the main reason. But What about a stock split, a regular stock split? That brings the stock price down so people can afford it. Just because it was so low and sold at, I couldn't find. So this was the peak. Look at it. Look at the wick on that candlestick. It got up to almost 180. 180 was the peak, his all-time high. Now it's a third of that. Look at every month. Look at how many green, red candlesticks. It's like about a straight year of bear. What a terrible year if you had it in April 2022 to July. Let's look at the month. Oh, those were weeks. Okay. So that was only like 2 months. That's probably these 2 months. These are the monthly candlesticks. So yeah, so it peaked up here. So you can see the bulls are kind of in control of this stock because, I mean, they always push the price higher. You can see how high the wicks are on top. Because when it's a high wick, that means the bulls push the price higher, but the bears did manage to bring it back down, and it closed the month at this point. Because when it's green, that means the top of the candlestick is when it closed. So and it's red, the bottom of the candlestick is when it closes the month. So it opened the month on the top, which was 150, and then it closed. This is May 2022. Then it closed at 130. Then the following month, it opened at 130 and then closed at 100. So it went back down to 100. But then 2 bullish months, then a bearish month. There's a big wick on top and a bottom. So lots of indecision. Like when it's a thin body, like here, that's called a doji. When it's a thin body, that's a lot of indecision because the bulls didn't really take control. The bears didn't take control. It's kind of like a back and forth, and no one really won that month. But the thing is, how do you know when? Like this was obviously a huge bull run starting in it was almost right after the reverse stock split, which is amazing because usually when the reverse stock split happens, I hate focusing on technical charts. Yeah, I don't usually look at this stuff, but I'm trying to understand it better because maybe I can figure something out. I still haven't really figured out much from these technicals. But you can see it's a huge bull run, which I would have loved to be part of that bull run. We could have all been rich. But the bears, ever since April 2022, it's a year and a half of a bearish trend. So can it keep going down? Dead cat bounce, head and shoulders. Just kidding. ML, yup, the last 6 months were incredible for the NASDAQ and Dow. Technicals are great for short-term trades. They work. Yeah, I don't know. I mean, I haven't had success with short-term trades, but I would like to try to figure it out. Because if you invest in a good company, like one of the best companies, Apple. So I say if you hold it for like 10 plus years, it doesn't matter really where you bought it. Like, because say you bought it here, I mean, that'd be amazing. Or you bought it in the early 90s or the mid 90s or the early 2000s or 2010 or here. As long as if you hold a great stock for a long time, you can't even tell when the best time to buy it was in the first 25 years. It all looks almost the same. So as long as you hold a good stock for a long time, you're probably going to make money. Now, if you're looking to gamble and trying to time things, then if you're holding for less than a year, then I'm thinking maybe looking at this could help you. It's not moving sideways since April 2022, because here's April 2022. It's obviously down. It's obviously going down. Maybe you mean April 2023. It's also going down from April 2023. I don't know what you mean by that. But maybe I should do a video. I'd like to learn more about the company. So here's a beginner tip. On the daily chart, I see. Here's a beginner tip in terms of reading financials. If you're not too comfortable with it, I would say just focus on the statement of cash flows and just focus on the first section, operating cash flow. This really kind of strips out a lot of the accounting noise, because when you look at the income statement, it can be really confusing because you might see this huge loss or maybe even a huge gain. And if it's a non-cash item, it's kind of irrelevant, because a lot of people say, why did the stock go down so much? Their net profit was higher than ever. But it might be because they just sold part of their business and had a huge gain from the sale of that, which is not really, you can't duplicate that. So you look at operating cash flow. I'm not saying this is the end all be all, but if you want to just not sure what to look at, look at this, and this will give you a sense of if the company's doing okay. If a company has negative operating cash flow, that just means they can't generate cash from running their day-to-day business. I was looking way out monthly. So if you see that the statement of cash flow is the cash the company generates from its operational business. So you have operating, investing, and financing. Those are the three sections. The cash at the beginning of the period is $86.3 million. And if you look on the balance sheet, this is the balance sheet. As on December 31st, 2022, they had $86.3 million of cash on their balance sheet, right? You see that? Now, if you go to statement of cash flows and look at how much cash they lost or generated. Mike, thank you. Thank you so much. Good to see you. You've been around a long time. I appreciate that. So, and this is for the 9 months ending 9/30/2023. So for the first 3 quarters, the company from their operational business generated $261 million of cash flow, which is great, right? In their investing section, they generated $6.9 million of cash. How do they do that? Well, they spent $13.7 million on CapEx, investments in property, plant, and equipment. So maybe a building maybe some machinery, 13.7 million, and they brought in 20.7 million from their investments in other companies. I don't want to get too far off on a tangent. I could explain this later, what equity method means. It's a type of accounting method. So they invested in other companies and brought in 20.7 million. That's not part of their operating section. It's investing, because their business is not to invest in other companies. In their financing section, they had a cash outflow of 265 million, because they paid 97 million. Okay, so these are dividends. They're mostly dividend payments. So when they pay dividends, it's a cash outflow. So when you sum up the operating, the investing, and the financing for the first 9 months of 2023, they had a cash inflow of 2.8 million. Are you with me? That's how much cash they generated from running their entire business. They started at the beginning of the period, which was 12/31/2022. The cash at the beginning of the period was 86.3 million. They added 2.8 million. So the sum of these two numbers is 89.2 million. So at the end of the accounting period, they have 89.2 million of cash. And now if you go back to the balance sheet, that's how much cash they have as of September 30th, 2023. So the beginning cash was at the very beginning of the period, which was 12/31/2022. And then after they ran their business for 9 months, they added 2 million of cash. So they have 89.2 million of cash. Does that make sense? So that's how the balance sheet and statement of cash flows are connected. Now, the income statement is connected to the statement of cash flows because to calculate operating cash flow, you start with your net income, 162.5 million, which is how much profit you have. They're doing the 9 months. It's not for the quarter. So the profit, your net income for the first 9 months of the year was 162.5 million. And that's how you calculate your operating cash flow. To calculate how much cash you generated from running your day-to-day business, you start with your net income, you add back the non-cash items on the income statement, because the income statement is a lot of accounting things going on, a lot of non-cash items like depreciation, which brings down your net income, but it doesn't affect cash. Stock-based compensation is a big one too. Not so much for this company. 8 million of stock-based compensation. That was an expense on the income statement. And then there's other adjustments. And then you have to adjust for changes in working capital. They had a cash inflow of 29 million. So their operating cash flow was 261 million. But I have a video. I have 4 videos going through this very step by step on connecting all the financials. Did anybody get that? Was that too fast? Or so they have a P to wow, a P to earnings ratio. A PE, literally a P. This is good. They spent 13.7 million on CapEx. That was just for the first 9 months. I don't know what they spent that on, but you can see they have 770 million of PP&E, P, and E. And if you want to know what's in that PP&E, It's mostly machinery and equipment, pretty much all of it, 1.4 billion, because they have to make the ammonia, or not make it or whatever, process it, whatever, takes a certain amount of ingredients. But they do own buildings and some cars, I guess, for transportation, land improvements, construction in progress. So 1.5 billion is the gross value, and then they depreciated 750 million. So that's the value on the balance sheet, 769 million. So all these are connected together. It's a little harder to show you how some of these others are connected. Well, it's not that much harder. You can just search, like long-term debt, 550 million. So they have a good amount of debt. Shout out to the 2 missing SEALs in the Gulf of Aden. Apparently fell in the water while boarding ship. So the dividend 39%. So the they're paying 6.25%, and it's due in 4 years. It's one note. So this is we got to plow our money into the stock. I guess I have to just buy it to track it, because it seems it doesn't seem that bad. Dividend of 39%. Before I read articles, I just want to see if there's any more. This was a 6 months ago. This article. Is it too good to last? Okay, CVR 38% distribution yield has skeptics out in force, and they should be. The average consumer probably comes across offers regularly that would be described as too good to be true. There's a variation of this truism that applies to dividend investors shopping for new stocks. Recently, dividend investors who form CVR now offers a huge 38% yield. While the yield is in fact real, is it too good to be true? A simple equation. A more conservative way to calculate dividend. A yield of 10%. With so much fluff in these articles, and the variability. Fertilizer sales are seasonal. When farmers are using fertilizer, demand and sales will be strong. But we are in the winter now, so I guess this demand is lower now in the winter. Perhaps the most important, however, the fertilizer commodity. That means supply and demand play a huge role. Not for everyone. So maybe we should buy Bitcoin instead. So they pay 260 million of dividends for the first 9 months of the year, which is all their operating cash flow. So they could cover it. It's not like they're taking on debt to pay the dividend. And last year it was even more. So they're probably going to cut the dividend unless the stock price goes up a lot. There's a lot of downward pressure on the stock. What's debt to equity current ratio? And you can see that the current assets of 200 million, current liabilities of 100 million. So the current ratio is almost 2. So that's great. So their debt is steady since 2016. 600 million, now it's down to 550 million. Equity is lower than their debt, but they're an MLP, so they have to pay out at least 90% of their profits back to investors in dividends. That's the problem with MLPs and REITs. They usually have to pay 90% of their profits back to the investors. So they can't keep much in-house. So they need to take on debt to grow the business. And that's why they pay such a big dividend, because they're bringing in more cash and they can't just keep it. Most companies can just keep it so they can grow the business, or keep most of it. They can't. They have to give 90% back. So we need to go to their plan in Sugar Land, Texas, and check this out, see if this is for real. Yeah, this is a real deal. I mean, the dividend is a little choppy. You can see they're paying $4.30. $4.30 in 2014. So for 2014 and 15, pretty consistent. 2016 and 17, then I stopped paying it for a while. I wonder why. That's what we should look into. But ever since 2021, so 2.5 years, so it's been a while, they've been paying great dividends. They did cut it. You know, it was like $10, but they cut it a lot. Sounds pretty good. Let's dig in deeper and find out what's wrong with it. I don't think there's much wrong with it. It's just a cyclical industry. It's how much they can charge for their product and how much they can sell. So it seems like they're always gonna probably bring in some money. Like in 2018, they weren't bringing in much money, so they couldn't really pay much in dividends, or nothing at all. So you can see the yield is always pretty. It's always good. I mean, it was low here. What's the share? But the share price is dropping a lot. I guess somebody smarter than us is, because usually the share price drops for a reason. Wait. It must be. I mean, it went up like a rocket ship from 2020 to 2022, but it's come down. But it's still $69, which is 10x from from just 2 years ago. We got to check the P profit margins. I think it's just cyclical, and but how would you have identified, like, why did it crash so much? They must have just ammonia must have been okay. Ammonia price chart. I wish I could just find ammonia price index. Here we go. No, I mean, yeah, COVID, a lot of things kind of fell apart during COVID. I get that. But why did I mean, they were priced, they fell under $1 as if they're going to go bankrupt. So it was that bad. I guess demand must have. Okay, here we go. Ammonia, US dollars. Okay, so the price of ammonia, look how high ammonia prices got in 2021. Okay. So I guess the price of ammonia was so low in 2018, 19, 20. It shot so high up. I'm not sure why it went up so much. It went up, it tripled, but now it's coming back down. So it's still higher than these levels. So I guess you just got to, like, predict the price of ammonia. It's just, yeah, I don't know. So it's a commodity play, so I don't even know anymore. They said the stock price corrected from a boom from demand. It's just like these marine shipping companies. If the rates these companies charge, when the rates go up a lot, then their revenue and stock price goes up. But when rates go down, so do the revenue and stock price. I guess like oil too. When oil is over $100 a barrel, the stock prices of, like, Exxon go through the moon. No, I know the stay-at-home orders, but not. But most companies didn't, like, nearly go bankrupt when COVID hit. Like, a lot of companies, there was only the market crashed for like a month and then it rebounded right back. So it wasn't like the world ended. And they sold fertilizer, so it's not like I don't know. It would seem like farmers are still working even during COVID. They're still, like, making crops, but whatever. Well, it was a hope, right? We looked into it. But okay, well, I got to pee now, talking about all this urea stuff. Okay. Well, thanks for joining. Thanks for donating if you did. I'll try to do this next week if I can. I'll try to be consistent. So leave a comment. Let me know what videos you want me to do. I'll talk to you later.